Please pay attention to this chart. Can you guess whether the price can break this level or not? The price will break this level and continue its path because it has come from a monthly level, and the strength of the monthly level is greater than the daily level, with the goal of reaching the next monthly level. If you can determine the time frame of supports and resistances, you can understand the priority of levels relative to each other and predict the probable price movement path before reaching the level. You can estimate the probability of breakout before the price reaches the level and establish precise rules for identifying the breakouts and trading them with higher accuracy. You can also trade price reversals in the moment. In this video, we cover these topics: determining the time frame of support and resistance levels, defining the range of support and resistance levels, valuing levels based on the time frame, price movement between levels. Friends, please subscribe to our channel and hit the like button to support us before we start. Please let us know your thoughts on our videos. We will see you after the intro and disclaimer. Welcome back, traders. So let's get started. Determining the time frame of support and resistance levels. When we identify a support or resistance, we raise the time frame so high that it is no longer visible, or the condition of having a pivot in that time frame is not met. In this case, the pivot is for a lower time frame. Pivots are actually those support and resistance levels. In the upcoming videos, we will teach you about pivots so that you can enter trades at the moment of price reversal. This chart is related to the 1-hour time frame. Pay attention to the level I have specified. To determine the time frame, we must raise it high enough so that this level no longer exists as peaks or valleys. We move to a higher time frame, namely the 4-hour time frame. This level still exists in this time frame. Therefore, we move to the daily time frame. As you can see, this resistance level is visible in the daily time frame as well. Then we move to the weekly time frame, where the level does not exist in this time frame. Therefore, since the highest time frame where the level is visible is the daily time frame, the level belongs to the daily time frame. Defining the range of support and resistance levels. We do not consider support and resistance levels as just a line and a number. Each support and resistance has a specific range. These ranges are usually directly related to the pivot time frame. To determine the range of support and resistance, we identify the furthest pivot level that is formed and define the range as the open or close of the candles within that range. This pivot range is approximately half of the ATR of the pivot timeframe or the support and resistance level. If at a certain time we identify a pivot and see that its range is larger than other pivot ranges, this can be the first warning for us that this pivot is not for this time frame and most likely belongs to a higher time frame. We can use pivot ranges as a criterion to determine time frame levels. Another point in determining pivot ranges is that these ranges depend on the behavior of the currency pair. In one currency pair, this area may be half the ATR, and in another currency pair, it may be the full ATR. Therefore, we must consider the behavior of each currency pair we are working with. If we have traded towards this level from the opposite level, we should place the target on the inner level. And to trade the price reversal from this level, we place a stop loss on the outer level. Valuing levels based on the time frame. Any level that has a higher time frame is more valuable, and in fact, the price can break levels with a lower time frame in the reversal from a level with a higher time frame. The priority is always with the higher time frame. As you can see, the price is reversed from the daily level, breaking the 1-hour level to reach the next equivalent level, which is the next daily level. Price movement between levels. The price is always between two equivalent levels in movement. After breaking each level, it moves itself to the next equivalent level. When the price has returned from the daily level, we should consider that the price movement is towards the next daily level, and if it breaks the daily level, it will move to the next daily level. This applies to all time frames. All right, friends, this episode has also come to an end. In the next part, we will explain on which levels to trade if you are a scalper, day trader, swing trader, or position trader. Please leave your comments for us.